Trading in the market can be difficult and frustrating if you don't know when to trade and how to trade at what time. In this video, I'm going to show you exactly how to trade and when to trade NAS100, US30, BTC, USD. I'm going to make use of the examples from the trades that I took last week on the US30.
Welcome to RFT Airlines. Welcome to RFT.
Now we are here, and then we are going to start on this PDF. So this PDF is going to tell you exactly what is happening around 15:30 when the New York open, because you've got to know exactly what is happening around your entries. There have to be something major that is happening around your entries. Where you enter, there has to be something major that is happening on a daily basis. It shouldn't be something as in like a once-off, but it's something that is happening continuously, like on a daily basis, so that you will be so sure that your entries, the market is going to move, and that entry is backed by real things that are happening. The market is not only based on the red price chart, but you have to understand exactly what is happening behind the movement of the charts before you can start to analyze what you are seeing with the charts and everything like that. You see, the reason why some trading model will work today, tomorrow, and then after that it doesn't work is because their entries are based on at the time where there's nothing major that is happening. You find someone trading the US30 around 12 South African time, and then when you ask yourself what is happening around 12 South African time, nothing major. The market around that time is simply just floating. It doesn't have any direction. It is not even decisive in terms of the movement that it produces from there. It simply just moves out of nowhere. But when 15:30 clocks in, that is when now you are going to see all of these things like happening, but you can't see them. You are going to see the market react. It will be reacting towards all of these things that you are seeing right here on this PDF that you are seeing right here. So always make sure that you enter or your entries are around something that is major that is happening. For example, 2:30, the US currencies market open. So by that, you're going to see news embargo list. You're going to see more news that are happening right there, even if some of them are not high impact news, major news announcements, but they are news. So therefore, you're going to see instruments like the XAU USD starts to react. You're going to see instruments like Euro USD, GBP USD, USD Swiss USD CAD starts to react. It's because this is when they start to move. There's something major happening that is directly meant for the currencies, that is directly meant to move the currencies, including the one spot metal, which is the XAU USD. So same thing with the indices. Wait for 15:30, then you will see magic happening because of these things that are happening right here. Right, let us now move to the red price chart. So this I'm going to show you exactly how do I approach the market and show you some of the trades that I took right there, how I came about those trades that I took. Before we can jump into the red price chart, did you know that you can win yourself free extra classes with me on Zoom Cloud Meeting and also be part of my group? All you have to do, go to the description of this video. There's a broker's link there, recommended broker, and then you're going to open an account, fund that account. Then after that, you'll be ready to be in my group, and then you'll use the Telegram number to contact me and tell me that you're done. And then now we are here on the real price chart for the USD. Then I was able to find a position right here last week, as you can see on the side. Now I'm going to give you a step-by-step process how I was able to find this position as a buy right here in this case. So firstly, we are going to start by doing the markings. Now doing the marking here, we want to find out the direction of the market that we are going to take at the right time. Either we are going to buy or we are going to sell. Everything in terms of the direction is found here in between 9 and 15. Here, two things that you are looking for. We either are looking for a continuation or a reversal. Then on this day, what you can see, we found a continuation. We found the market opened and pick one direction to the upside. So by this, if you found the market that opened and pick one direction, means at the right time, we want to see the market open, drop, then 15-day to drop, and then we want to see the market continuing to the same direction all the way to the upside. That's what you are looking for. But before we can confirm all of that, we need to apply what is called the ADR, the average daily range. So what the average daily range will tell us, well, guides us into validating this continuation, if is it still possible for us to continue to the upside right here, or the market is done moving to the upside. Because when the market is reaching ADR, it means the market is done moving to the upside. What can happen is that either the market will consolidate, or either the market will simply just reverses all the way back down. That's what can happen when the market is reaching ADR. So that's why we have to check it first, because you can see that this is a bit of a widened movement going to the upside. So it's always possible that the market has reached an ADR. But when we checked on this day right here, we found out that no, the market has not yet reached an ADR, because the ADR on this day was around 1.33. And then when we can calculate the average daily range right here, from the low to the high, you can see that the market had only covered 0.46, which is a bit too far from 1.33%. So by that means it is still possible for us to continue to the same direction all the way to the upside right here. So that means this continuation is still valid, that the market can still go up in this case. Now, what we can do now is to go to the forward time frame. On the forward time frame, what we are looking for, we want to find out if is the market on the forward time frame agreeing or still on the same line with what we found right here as a continuation, or the forward time frame will speak different language to what we are saying right here. Now let's go to the forward time frame. Now in the forward time frame right here, we've got the market here that was flat. Then after that, we found an explosive candlestick to the upside right here, meaning this is in line with what we found on the smaller time frame. On the smaller time frame, we found the market that opened in peak one direction, which is the same thing right that you are seeing right here on the forward time frame. We are seeing the middle candlestick right here opened in peak one direction to the upside, as you can see. So therefore, that means what we found at the smaller time frame for a continuation to the upside is valid. So this is what we can do now when we get back to the 15-minute time frame. Now, after finding out everything that we just found on the smaller time frame, 15-minute time frame, and the forward time frame, therefore now this is what we are looking for at the right time. We want to see the market open, and then 15:30 drop, and then after that we want to buy this market. That's what we want to see, because it is a continuation. But if it was a sell, it was going to be a different story. But since we are looking for a buy, we want to see the market open, then 15:30 explode to the downside, and then after that we want to buy. Now let's see how we can construct a position here. Firstly, we are going to allow it to play out. Now, this is 15:30 right here. As you can see, what happened is the market opened, explodes to the downside. So by that, it means it is now possible for us now to reverse this all the way back up in this case. But it won't always be a situation of us being tagged into a position by the 15:30. Sometimes this candlestick will be shallow, will be small, which will require another candlestick to paint out after this one, so that you can be tagged into a position. It just that on this day, the market had enough volume, enough momentum to push through to the downside to take us in and find a position to the upside. So the position that I took was somewhere here. But for the sake of the video, since this is a bar replay, I can just put any position right here. Now let's just put it in this way and say we had it here, and stop loss few pips below there, and then you're going to apply risk-reward ratio of 1:2. Let's see. So 1:2 risk-reward ratio matches very well with this previous swing right here. And this previous swing was already going to be our first TP of the day, because we don't want to be reversed by the market dropping to the downside by that, because we never know what will happen after this swing. So to make things simple and straightforward, keep things simple and straightforward around this swing. So this swing was going to be our first TP, and this first TP matched very well with our 1:2 risk-reward ratio. Is going to say right here, perfect. So therefore we can play. Now you can see what's happened. The market opened and picked this movement all the way to the upside like that. Easy and straightforward. You don't complicate this thing. Keep it simple and straightforward. Keep it simple and straightforward. You don't need as many pips as possible. You simply just need few pips and manage your risk-reward ratio properly. Manage your risk-reward ratio properly. 1:2 and then you're done. 1:2 and then you're done. That will give you an exponential growth to your trading account as well as to your trading skill, because you are taking two from the market when you're making a profit, but the market will always take one from you when you are making a loss. So that's how we will be killing this market in this way. Easy as that.